now focused on corporate impact investing. My name is Jeremy Doyle. I'm part of Trialogue's associate network, and I'll be hosting you today. Our starting point is that corporations and corporate foundations hold trillions of rands in assets, and the way they deploy these assets already influences value chains, market systems, and outcomes for people and planet. The question we're exploring today is, how can using impact investing strategies help them wield this influence to have outsized positive impacts? What does that look like in practice, and what prevents more corporations or corporate foundations from engaging directly in impact investing activity? We're looking forward to exploring some local case studies with you today, and also looking at the broader ecosystem, understanding the opportunities, but also the barriers to getting more involved. Just to say also, corporate impact investing is definitely an emerging space. It's quite an exciting space, lots of experimentation happening in lots of places. So if anyone has examples you think we should know about, please share it in the chat as we go. I want to say a big thanks to our panelists for sharing their insights and time with us today, and thanks to you, our audience, for joining us this morning. We host these online forums monthly on the last Thursday of the month, so please mark it on your calendars. They're 90 minutes long, which gives us a bit of time to delve into important topics like this one. A few technical points before we get started. So our platform allows you to follow the discussion, connect with fellow delegates, and vote in polls and rate the session. You're also encouraged to ask questions throughout the session. You can do this by clicking on the green Ask a Question bar before typing your question. We'll draw questions from the Q&A box for our panelists to respond to later on. Please just make sure you direct the question to one or more of the panelists and keep it as brief as possible. There's a short survey which will pop up at the end of the session. Please share your thoughts so we can improve future sessions and focus on topics that are of interest to you. Finally, this session is being recorded, and an article and recording will be made available to everyone who registered. Great, so moving on to our agenda for the next hour and a half. I'll spend a few minutes setting the scene, after which I'll be handing over to each of our panelists for their opening comments. We'll then dive into the discussion, and our panelists will answer some of your questions from the Q&A box. Each panelist will then give some closing comments, and we'll wrap up by around 11 a.m., so from the next hour and a half or so. Before we get into things, let's just see who else we have on the call with us today. You might have seen we've launched a poll just asking what type of organization you represent. This will help us shape the discussion. If you could go to that poll and respond so we can see who we have in the room. Special welcome if you're a first timer to one of these sessions. I'll give a few moments for people to respond. Nice to see some different organizations represented. Just while we're waiting for some more responses to come through, I just want to speak a little bit about Trialogue for those who aren't familiar. So Trialogue is a South African-based consultancy with over 25 years experience, specializing in corporate responsibility, sustainability, and social impact advisory. Its mission is to partner with companies to achieve positive impact for business and society, and this is done through advisory work, thought leadership, conferences, and webinars like this one. Trialogue works across the spectrum of capital, from commercial enterprises to philanthropy, including CSI, corporate foundations, and trusts. Just a reminder that a recap article and full recording of this webinar will be uploaded to the Trialogue Knowledge Hub. So that's our agenda for the next just under an hour and a half. I want to dive in, before we dive into discussion, I just want to start with a bit of a definition of impact investing. and make sure that we're all familiar with the key concepts before diving into the discussion with our panelists. So just to start with a definition of impact investing, so I'm sure many people on this call are familiar with some form of this diagram. This one is adapted from the Rockefeller Philanthropy Advisors. So on the left-hand side, we have traditional commercial activities that generate financial return. On the right, we have traditional philanthropic activities that generate social and environmental impact. So when we talk about impact investing, it's essentially this wide range of activities between the two. And we'll define it today as deploying funds with the intentional pursuit of both financial return and social or environmental impact, or both. But just to say, this happens along a spectrum from market return expectations all the way through to return of capital on the right-hand side. We've started another poll to gauge the level of knowledge in the room. I expect there's some people here that are sort of quite familiar with this, done a lot of work in this space. We may also have people that aren't as familiar with impact investing. So it'd be good to just get a sense of how that's distributed across the audience. So we've also included some examples below the diagram. On the far left, commercial investments and operations would fall into traditional investing. Thematic investment at market rate return would be a sort of focused on a specific sector, but it's still expecting a market return. A step-down loan might help to reduce the financial burden of an intervention, but still have a financial return. Return of capital is an expectation of receiving capital back, but nothing more. So the spectrum goes from left to right with sort of grant making and no expectation of financial return on the far right. Right, we'll jump into the next slide. Just a reminder, we're saying impact investing is deploying funds with the intentional pursuit of both financial return and social environmental impact. So when we talk about corporate impact investing, we're just talking about when companies engage in some kind of impact investing activity. The space is still emerging. There's no set model, but we can start to see these two dimensions that are important. The one is ownership, so where the sort of intervention sits in the organization, and the other is the type of strategy being used. The first on the left being where the intervention is being driven from. So some interventions can sit inside the corporate entity. This might be driven by the sustainability department or corporate affairs or some other part of the organization with funds coming from the balance sheet. So this could include supplier development or enterprise development funding, could include product innovation. It also could include CSI. Impact investing can also then be driven by a corporate foundation independently of the business. So this can have varying levels of integration with the corporate entity, and foundations may even have a mandate to act with complete independence. This potentially means more flexible capital, more flexible approaches, and helping to maintain focus on impact outcomes that help the foundation remain true to its strategy. Regardless of where the intervention sits, there are also a number of strategies that organizations can use. So it's important to say that it's not necessarily that you have to set up an impact fund. There are lots of different ways to approach impact investing. So these different strategies can also be used in combination with each other. And we've listed out a number of these that sort of we can see in practice at the moment. We have also activated another poll to sort of understand how many of our audience members have been engaging in this kind of activity. It would be good to see, just to get a sense check of where everyone is at, whether these things are familiar, people have worked in these spaces. And And also it doesn't necessarily have to be within a sort of corporate space. It can be any of the strategies on the right-hand side. I'll just give a few moments for those poll results to come through. There's definitely a mixture of results that we're seeing. Quite a few results coming in saying we have a mature impact investing strategy. It would be great to hear some examples. If we can get anything on the chat, feel free to put in some examples that you've been involved with in the past few years. Okay, great. So just to recap before we jump into some questions with our panelists. So impact investing, we're saying, is deploying funds with the intentional pursuit of both financial return and social or environmental impact. Corporate investing activity is when corporates or corporate foundations engage in impact investing activity. Impact investing can be positioned within the company or within an independent foundation, and interventions are not limited to impact funds, but can also include quite a diverse range of strategies, sometimes in combination with each other. Okay, so with that context, we want to get into a bit of discussion with our panelists. So we're very privileged today to have some representatives from two projects that will give a flavor of what is possible in this space. We have Samira Munshi, who's operations manager at the Anglo-American Foundation and is here to tell us more about a new fund that has been set up to invest in clean energy enterprises using an innovative funding mechanism. We have Brighton Thobu, who's managing director of Blue Sky Impact Investments and is here to speak to a community-owned enterprise that's been receiving early stage financial support from a renewable energy company to become financially sustainable. We're also very privileged to have Frank Aswani, CEO at the African Venture Philanthropy Alliance, and Nick Workey, Managing Director at Trialogue, who will both provide insights and reflections from a broader ecosystem perspective. I'll ask each of our panelists to briefly introduce themselves and give a bit more context to their work. Can I just ask our panelists to turn their cameras on when I come to you for your opening question? Samira, we'll start with you, if that's okay. Samira, are you with us? Hey.
I am. Good morning, Jeremy.
Good morning. Great. So I'll start with you. It'd be great if you could just give us a little bit more context around Aseli Impact Capital and your role on this project, and also if I've pronounced Aseli right, because it's a mixture of languages that was used to create that.
Great, right. Thank you, and good morning, everybody. As Jeremy said, I'm Samira from the Anglo-American Foundation. At the Foundation, we believe that philanthropy has a unique role to play in tackling structural barriers that continue to limit opportunity. For us, Aseli Impact Capital is an innovative finance mechanism, and it's a vehicle to fund businesses that deliver measurable environmental and social impact. It was born out of a partnership which is quite exciting. In 2020, 2023, we were testing our new strategy, and we started by providing learning grants to various organizations to test and pilot small practical solutions. Savant was one of the partners of those grants, and through working with Savant for the first year, we tested an assumption which held true, that there is no shortage of green innovators in South Africa, that almost all of them sit in the structural funding dead zone. They're just too advanced and they've outgrown grant funding, but they're either perceived to be too high risk or they're not yet ready for commercial equity or debt. And so in this missing middle is where they sit. Savant says, if without the support, 60% of these businesses will fail. And so it was this gap that we were explicitly trying to close. And working with Savant, we started to ask ourselves, what would capital look like if we designed around the operational realities of these impact-driven businesses? And Savant went and did a lot of work through they work with a lot of entrepreneurs. They are a venture capital firm themselves. And so they had the research and the network to go and explore. And in exploring, they came up with a proof of concept that really tested the feasibility of creating a sustainable investment vehicle to support the green sector. And as a foundation, this was really interesting. We gave a further grant to explore this. We then asked Crutham to join on board. And Crutham is a premier impact advisory firm and research firm, and they provided that great sounding board to both the foundation and Savant to support this work. They supported us on the governance, the impact measurement and management of the work, and with just a great thinking partner to ensure that between all three parties, what we were producing was structurally sound. So how Celia works, it is a permanent capital vehicle. And what that means is that it is, there's no exit event or no big returns. It is a patient vehicle. This is built around long-term ownership, around stability, around value creation. As an investor, you get your returns from the performance of the businesses who are supported through the vehicle. So you get your returns through dividends or through cash flow. And any capital that comes back into the vehicle is recycled. It's not withdrawn. So it is an evergreen vehicle and it's perpetual. We use a mechanism called a revenue-based redeemable preference share. And it's a mouthful, but what that really means is that the businesses pay back and their repayment terms are based on how the business grows. And so it's linked to performance. It's not some arbitrary date by which a business would need to pay back their loan. And what this does, it really removes the pressure from the businesses, and it supports their survival, and it speaks to the realities of the businesses that we're trying to support. And wrapped around all of this is technical assistance. So that is governance, strategic support, impact tracking, and really ensuring that ultimately the businesses are able to scale and repay sustainably. And eventually what that means is that they are then ready for that commercial capital and the next phase of capital, whether it's in the form of debt, equity, or other. Thank you, Jeremy.
Thanks, Samira. Thanks so much for sharing that context. And I've got a few questions to follow up with you. I'll first go to the other panelists, just do a quick intro, but we'll come back to you with some questions. But yeah, thanks for setting the scene. Sounds like a really, really interesting intervention. I'm going to go to Bright next. Bright, would you be able to tell us a little bit more around the Onseepkans project? That name escapes me sometimes. And your role as Blue Sky Impact Investments. Just give us a sense of the project, and we'll go from there.
Okay, thanks, Jeremy, once again. Thank you for everybody. Yeah, with Onseepkans project and our involvement as Blue Sky, the first thing I should say that Onseepkans is a small rural town, which is in the Namakwa region, Kaima region, basically, but within the Namakwa area. And there's approximately about 2,500 people that live there. And I'm telling you, if I say remote, I mean that if you want to go buy groceries, at least you will drive an hour just to go get groceries. So what the project actually involved from our side is that it's basically a land restitution project that was land that was distributed to the people around 2005. And there's about 114 landowners. So it's a massive amount of people that receive land. But the parcels of land that was given really is small amounts. Like they grouped 6 people into a small 4-hectare portion of land. So within our involvement as Blue Sky, we had to not just come up with a model, but see what model would work, and as well as try to give on hands-on support as well, to make sure that the model that is there works, and as well as that we can set up a business that then can allow some economic development, or is at least economic development to happen within the area itself. So on Siepkans at this stage, which is quite awesome to speak about it actually, it has about 90 hectares of land collectively with 114 landowners. And what's still amazing about it is that, when you give a parcel of land to people, you can't just take it away and put it in a company. So we've still kept the land the way it was. It's all blocked up into little close corporations. But the model that we working with at this stage is that how do we then operate from a business perspective while this land is locked up in little CCs. So we assisted them to set up a trust where all the beneficiaries are basically part of the trust. And then as well as assist setting up if I can say, an operational vehicle. That's literally the business that runs all the operations. That's called OSK DevCo Ellenburg. So one day, if anybody goes to Onsiepkans, you see there's a big board that says Ellenburg there. Ellenburg is really the vehicle where everything gets done in terms of all the farming entities. All the farming operations happens within Ellenburg itself. So at this stage, the awesome thing about the Onsiepkans project is that the land is owned by the people. So they're the rightful owners and beneficiaries of it. And then the means of production, which is Ellenburg, is also owned by the people themselves of Onsiepkans, but through the trust itself. And through the trust, we've managed, not us as Blue Sky, but the people themselves elected about three trustees that serve on the board of directors on Ellenburg as well. And then myself as well, I'm on the board, and there's two other members as well that are on the board as well. So it's kind of a beautiful mix of experience and those that are growing, at least within the governance space as well, and understanding the business itself. And the beautiful thing about the project is that everything that we have, the asset, which is the vehicle, which is Ellenburg, is owned by the people, as well as the asset that's on the land itself is also owned by the people. And now I can actually, with a lot of grace, if I could say that, because it's been a lot of hard work, really say that the revenue has been growing. It started off with 170,000 Rand the first harvest. It's basically organic raisins that's been farmed in Onsiepkans. And today we're looking at about the revenue of about 20 million or so that's been growing. So since 2016, we're speaking about the first set of harvest was 170, and then gradually been growing from since then to about 20 million now, approximately 20 million where we are now. And we're looking at expansion. So the Onsiepkans project itself is really let's say one of the few, but I should say also, like, it takes quite a lot to get to this stage, Jeremy. So once again, from a Blue Sky perspective, our role is more of a supportive role, structured hands-on support, and we've kind of coined the phrase to say that we are there to build scaffold and ensure that the building gets up, meaning that all the processes and structures, the governance that needs to be in place for business to operate, that's where we come in. And as that obviously improves and gets embedded within the business, that's when we start, I call it, breaking down the scaffold. We start gradually stepping back from many operations, which we have done now on some of the systems. At least we have handed over to the people that can run with them. So that is a bit of OnSeepKans, and as well as the bit of Blue Sky. I should say that we are really, if I say hands-on, it's really a small team of developers that work together with various type of skills, and it's not just one set of skills that you need to have. It's really various set of skills, from stakeholder engagements to really building the trust for whatever how long it takes, to literally assisting the guys to raise funding itself. Yeah. So the whole chain of how do you develop a business, shift the mindset from project to business mindset. That's really where we operate in on the project itself. Jeremy,
Thanks, Brian.
Okay, great.
Thanks so much for that introduction. And I think in the discussion, we'll get into a little bit around the role of Skatech as well, as a renewable energy company that got involved in 2022, I believe.
Yes.
But we can pick that up in some of the Q&A. I'll come back to you on that one. But yeah, great initiative, and nice to hear 170,000 to 20 million in revenue is not a small feat. So great, thanks, Bright. Frank, I'm going to come to you as well, just to give a quick introduction. I'm keen to hear from you a bit about your role and the work of AVPA for those who aren't familiar, but also just maybe a bit of a question for you as well is, do you see this role for large corporations to play in impact investing in Africa? Do you see it as something that's possible, or do you see them too constrained by commercial interests and would be better just focusing on ESG and responsible business practice? Or do you see, a genuine role for commercial organizations to get involved in this space?
Thanks, Jeremy, and thank you to Trialogue and my fellow panelists. So, morning, everyone. My name is Frank Aswani. I'm the CEO at AVPA. We are a Pan-African network of impact investors looking to solve and address Africa's social investment financing gap. Generally, we use the SDG framework because it's pretty well understood between the private and development spaces. And how do we close that SDG financing gap? Depending on who you talk to, that number varies, but generally it's about $250 billion a year we need to find between now and 2030 to address Africa's SDG financing challenge. And the biggest issues we are facing right now is how do we deal with this in the context of declining aid? I'm sure you've all seen the recent aid cuts that came out of the US and Europe, and then our governments are generally broke, and we're adding about 1 million people a month to the continent. So we have less money for more people. So we're really entering a phase of needing to do more with less. And how do we deliver a multiplier effect with every single rand, dollar, or pound, or shilling that we deploy on the continent? So at AVPA, we bring together people mainly deploying financial capital, grants, debt, or equity. So that's what also makes us very unique. Many networks would be either philanthropists on their own or private capital on their own. We bring the whole continuum of capital together across grants, debt, or equity, because we believe the solution in building Africa's sustainable growth will come from blending, on one hand, the risk appetite of philanthropy and grants, because philanthropy can take that role of funding innovation, which can be funded by private capital, testing new markets, new products, new services, getting them to the proof of concept phase, and then the private capital comes in to scale those proven models. So we are very much about bridging this divide between philanthropy and private capital into this middle space of impact investing and innovative finance. Our headquarters in Nairobi, we have offices in Johannesburg and Lagos, but I sit in the Joburg office. And the whole of our intention is to try and see how we can increase flow of capital into African social investments by enabling social investors, be it foundations, family offices, aid agencies, DFIs, corporates, governments, and fund managers, to do what they do better, cheaper, and with more impact. That's basically what we're trying to do. So we support them through that whole process with various things like research. We have a deal share platform, we do a lot of training, so on and so forth. Jeremy, to your question around corporates. So we're not going to achieve the SDGs without private capital. That's a fact. there isn't enough money to close the social investment gap Africa is facing from the traditional sources of capital. So if you look at globally, we need 1% of what's available in the financial and capital markets to solve the SDGs. So the problem in the world is not shortage of money. The problem in the world is we don't have enough risk capital. We don't have enough risk capital to de-risk social investments, so it can be attractive for private capital to come in. So with that context in mind, corporates are a very significant part of how we are going to mobilize the right amount of capital in Africa to get us to a path where we want to be and build a sustainable continent. And the other big reason why it's even more important today for corporates to care about social challenges is traditionally social issues have been left to the development sector and governments to solve. The difference is that today, social issues are becoming business risks. So what you could afford to ignore 10 years ago, you can't afford to ignore now. I'll give you an example. If you look at things like youth unemployment, for example, if the youth unemployment continues at its current rate, private players like pension funds will close in the next 15 to 20 years because there isn't enough people contributing to pension funds. FMCG companies will have to deal with much smaller proportions of the population that can afford their products. Companies that are processing food will have less food to process because climate change will have affected agricultural productivity. So it's not an option anymore for corporates to sit on the sideline and not pay attention to some of these issues. And so I'm a big believer that right now, corporates should be truly invested in finding sustainable solutions to solving some of these issues because it's going to affect their businesses downstream. And not to do this through corporate social responsibility, that's not the full capacity they've got to influence change, but also in how they do business. So basic things at a very fundamental level. For example, how many of our corporates are helping address the youth unemployment problem by just assessing what percentage of the suppliers are youth and women? Okay, how many of the corporates who, for example, in the food value chain are doing a backward integration of trying to see how sustainable practices are being implemented in producing the product that they process. So this space has become, it's no longer black and white. There's a whole gray space in between here. And it necessitates that corporates show leadership and step in to influence some of these social issues, because if they don't do that, it will come and affect them downstream.
Thanks, Frank. And I think that kind of idea of corporates also playing a role in both of those spaces, both on the sort of commercial activity side, but also through CSI and foundations on the philanthropic side, have that kind of, I guess, unique role to play across the spectrum of capital that maybe impact investors who are a little bit outside of that almost don't have quite the same mix of different kinds of capital to deploy. So I think, yeah, it's interesting to think about also the sort of business risk side, but also the potential for social impact side that organizations have. I want to dive into a couple of the case studies that we've got here. I'll come back to you, Frank, at a later stage as well. Thanks for those opening comments. I've got a few questions for you too. I just also want to mention for those in the audience, we do have a Q&A box. If you have specific questions for any of the panelists, it would be really good to start seeing some of those come through. In the meantime, I'll kick off with a few questions and we'll get a little bit more into the detail on some of these initiatives and also some of the perspectives for different organizations playing a role in this space. I'll start with you, Samira, and maybe Samira, Bright, and Frank can just keep your cameras on going forward as we switch between you. It would be really interesting to hear, Samira, from Anglo-American Foundation's point of view, what triggered the first investigation into this kind of innovative financing model, and how did you approach this shift? You know, was it an unfamiliar move into the space? Was there sort of a need to change any sort of foundation policies or ways of doing things in order to make this happen? What are some of the things you had to kind of grapple with as an organization moving into this more innovative financing space?
Thanks, Jeremy. So It wasn't a big shift for us at all. For us, philanthropy is about deploying capital to meet a need. And our capital that we have as a philanthropy is patient, it's flexible, it's free from targets, and this allows us to take risks and to learn. And so, whether we deploy the capital through grants or through debt or other means, we are deploying philanthropy capital in a way that meets a specific need, in a way that creates impact, and in a way that, often sometimes we choose to be the first loss of catalytic funder for this. So it is just the way we do our work. It wasn't a policy change. We didn't change any of our governance structures. They were designed to support this work. Perhaps the biggest change rather was, as a team, our learning and our awareness expanded as we journeyed over the past two and a half years with Savant and with Crutham. And in that, we have, as a team, new ways of thinking of how to deploy capital. We have the confidence to deploy this capital more meaningfully.
So you're saying it's sort of more maybe capacity building or sort of changing practices and ways of thinking rather than necessarily structures and policies.
Yeah, and maybe, I always say our secret sauce was also in our partnership, right? We didn't pretend to know that we know everything in the room. We worked with Savant for a year. We saw what they were capable of. We saw the deep expertise that laid with them. And we took a chance on them as we explored and as they came with more research and supporting their growth. We then brought in Crutham, who has a strong knowledge and technical expertise. And they have their capabilities around impact measurement and managing. They've allowed us to have, they had the technical expertise to have a soundboard around what Savant was putting to us. Does it make sense? How can we make it better? And so it was deeply collaborative. And what we did was we organized ourselves around each organization's capabilities. So through this design, which was a co-design process, is highly collaborative, we had 3 work streams. We had a work stream that focused on the governance and structuring and the financial technical expertise. Savant led that piece of work. We had an impact measurement and management piece of work because we really wanted at its core to embed impact in our work. We wanted metrics and indicators. We wanted to ensure that the job creation targets that we were ambitious about actually stand. And Crutham and the foundation led that piece of work alongside Savant. And then we had our communications piece, which is a joint effort between the foundation and Savant. So we in a sense, I suppose we took our egos out of the room, right? We looked at each of our skill sets. We had a core mission, and it was that partnership approach that I think ultimately gave success to this process.
Thanks. I mean, you've mentioned the role of collaboration and partnerships and bringing the right expertise together. I think that's a lot of people relate to that, and maybe we talk about it a lot, but actually doing it in practice is quite hard. So it's nice to see an example of that working. Maybe just for some of our audience who are maybe from an NGO background, I think we have quite a lot of people on this call, and also who may not be quite familiar with the impact investing space. Could you maybe just explain a little bit more about the permanent capital vehicle, like how you chose that, what it is, how it works, and also just what it means for your investees, how they can think differently because they know they're not sort of on the hook for delivering a certain amount of return within a short period of time.
Yeah, sure. So a permanent capital vehicle is different to a traditional fund that has a short lifespan, that has, high targets. You want to come in, make your money, exit. There's a sale event or an IPO event where you make your money from the sale. Instead, a permanent capital vehicle is that it is permanent, it is perpetual. What it means is that it allows for us, it was the right type of vehicle because it offered patience and it offered flexibility. It meant that for us, we could walk the journey with each of our investors over time, and we could link the performance for each of those businesses to their performance themselves. So through the share scheme, it meant that as the business grows and can afford to pay shares, we would then draw down a dividend, or through their cash flows they would pay. So it gave us balance, it gave us stability. It also gave us time, because ultimately we are focusing on long-term job creation. We are focusing on a climate impact. It is about preservation of capital and survival of the businesses. So I know a lot of people might criticize it for being less liquid, but the point is that through that patience, we were able to support the businesses to scale.
Thanks. That's really helpful. And I think maybe just going across to Bright, I think there was something around the way that the deal was structured that allowed a kind of a similar thing. So maybe you could talk a little bit about how the deal was structured and the role of Skatex investment a few years ago, and what that meant for the community and for the way that they were able to, I guess, operate in a different way than sort of expecting to deliver a high return on investment.
Okay, thanks, Jeremy. I think I should start by saying that initially when the project started, there was a bit of grant funding coming from the Department of Agriculture for the project itself. But what that meant was that the grant funding was only directed for production itself. That's meaning that if you're working on the vineyards, you'll be able to buy your fertilizer and whatever you need for the vineyards itself. But when it comes to the business development side, and especially the support that they need, that was something that was void. So you would have the asset there, that's the ground, and yes, you can plant, and technically the people could plant because there's a good production manager on site as well. But now when it comes to what happens with let's say, your accounting processes, what happens with your finances, are you able to access any capital except, funding, except what you get from the Department of Agriculture as well? And that's some of the things that was void, as well as the governance structures in terms of the board, that was void as well. So when Skytech actually got involved, and from our side, obviously we have to set up a proposal and try to convince them and say there's actually a case here that we have a business that we think can thrive, which the impact is immense. I mean, can you imagine 2,500 people? The employment, we're looking at 300 people that get employed just at this one company itself. I mean, that's a lot of people from the community itself that get employed there. And part of the thing from our side as Blue Sky was to convince Skytech and say, listen, can you guys walk a journey with us on this, so we can set up the structure properly, and also to make this business bankable, because we need to get to that, make it commercial, move from a project to a business perspective, and obviously have that change management happen. So Skytech's investment into the business was that it assisted the community, that they don't need to fork out that money to get this type of expertise that we bring to the table, and as well as the processes and the structure needs to be in place. So Skytech basically subsidized the business itself, or the project, until the revenue grows, and that's really where we came into play. So the returns, if I could say returns for Skytech, was really the impact that they're receiving now. Revenue is growing. Number one, I mean, all the revenue goes back into the community again. I mean, the money that I'm mentioning to you, I mean, more than 50-60% of it goes back again into the community in the forms, obviously, of salaries, and as well as some service providers that also assist the business. And lastly, to say that with Skytech's involvement in there, it gives the project a bit of time to breathe, if I could call that breathe, or time to mature and grow in a very patient and sustainable way, because change management is a very difficult thing because we're dealing with people. So you might get that the project itself is only ready within 1 or 2 years to move from, I'm just making an example, to be a bankable business. But then Skytech, funders like Skytech came in and said, listen, we're willing to walk the road with you in terms of making sure that this project is sustainable. So the involvement really, Jeremy, it brought about a lot of, how can I say, obviously injection into the main project, but as well as to allow us as developers to work and ensure that we get to a point where where revenue can grow and capacity is built within the business itself. And if there's not enough resources or let me say capacity can be built within the business, where the revenue grows to such an extent that actually the company can hire somebody that can actually work within that business, obviously embedded into the ONCEP way of doing things. But that's one thing that support has assisted the project, from SkyTech itself.
Thanks, Brian. And so I know SkyTech was operating in the area, so it's a renewable energy provider with operations near where this initiative is taking place. Did you or do you have any thoughts around how this project could link in with their organization? Have they, had any discussions with you around that? And if you were sort of giving advice to organizations like this in the future, what kinds of links or support into the organization might be useful for this project? Or do you see it as just, we just need the funding to come from somewhere, and it doesn't necessarily matter if the organization is invested in the area?
I think the second part might be the one that I would go for. It sounds a bit blunt. Just because, look, in this case, you're dealing with a farming entity, ONCEP Kans. And SkyTech's involvement obviously mainly would be firstly to deploy some funding towards the project itself. I think maybe the only place, Jeremy, that might be a touch point is that when you look at, because they're in the solar business, is there a way that we can maybe deploy some sort of the expertise to bring electricity down as well to assist the operations? Maybe that's one area. But the involvement itself, I would say funding, but long-term funding. That's the big thing. You can't commit for, and maybe I should say this as well. Look, from a developer's perspective and looking at the project itself, is that it's really a multi-year project, and you cannot determine, or we cannot determine what are the shifts that will be within a year. We can plan for it, we can strategize for it, we can make sure that everything, our ducks in a row, but we can also push to make sure those things happen, but it's not a guarantee that everything will be accomplished within that year. So what we're looking at is to say, if SkyTech comes along, is to say, as a business, are we willing to fund for a longer period, and then walk the road with the project itself? Because that gives at least a bit of comfort to say, okay, what can we shift? Do a yearly, if I could say, yearly review to see where you are, what are the changes that needs to happen. So it's more of a partnership really that you need to walk with to make this thing sustainable. So again, from your question, I'm saying the second part of it made more sense to me, just because it's a more of a farming entity. Maybe if it was something different that we're doing more aligned to their business, which is within the renewable space, that would be much easier to connect those two dots together. Yeah. But for now, like I said, it would be one operationally just within their space of renewable energy, but the rest would be deploying funding for longer term, to make sure that we can actually, achieve the goals that we want to achieve together as partners.
Yeah. I guess it's always that challenge of starting from community need and somehow meeting with organizational need or organizational sort of strategy. And it sounds like you've found a way to sort of meet, but there's potentially some opportunities for SkyTech to think, what can we do more collectively in this space, linking it to our current operations, etc. But great that they are willing to invest that sort of patient capital to help you get up to speed. And maybe in a future webinar we could get someone from SkyTech to kind of speak to that side of things. But it sounds like their investment in the area would be a key part of that, being open to sort of funding that kind of initiative, and maybe why they were the right investor for you. I want to thanks, Brad. That's really helpful. I want to switch back to Frank and maybe ask a bit of a related question around, you spoke quite a bit around the opportunities for commercial capital. And you talked a bit about the lack of risk capital to come in and sort of help make these deals attractive. Could you just kind of dive into that a little bit more? Like, what are the practical barriers that you see preventing, organizations like SkateTech, for example, getting more involved in these kinds of spaces where maybe they're not conventionally would do in the past? What are the main things, the main barriers stopping this kind of private sector investment when it's clear that everyone has a role to play and something to gain from addressing social and environmental challenges?
Thanks, Jeremy. So a couple of things. One, I think the first thing is we need a mindset shift. We need a mindset shift across all of us. The people in development, for example, have to get comfortable with profits in development. That's kind of where the future is going. So long as the profits are non-exploitative, but they're building sustainability into the models, this is kind of what will attract money and investments going forward. And the people in the private sector have to also realize that you can make money as you solve for people and planet needs. So just because you're solving for people needs does not mean you lose money. There's many ways that you can solve for people problems and still do it profitably. So we have to, first of all, change how we think. That's the first thing. The second thing, we need a bit more information and understanding by the players in this space about how to play in this particular environment. So we did a study a couple of years ago, and one of the biggest things that's holding people back is just the lack of knowledge. People are unconsciously incompetent. They don't know what they don't know. So the willingness and ability to learn around on matters around impact investing, around caloric capital, that is something I think we need to do a lot more of. So that's why at AVPA, for example, we run quite a number of training programs. And part of the problem is in Africa, there's just not many places you can go and study and learn about impact and sustainable finance. I think, in fact, the whole continent, we have one university that teaches it. So the sense of urgency around building a critical mass of impact competent human capital is really urgent as we speak. And then the second thing, we need people not just learn through trainings, but also learn by doing and learn through communities. So how do we plug people into communities of others who've gone before them and who are doing this kind of stuff so they can learn from them? Attending sessions like this is very important because you come and get a lot more knowledge. So it's important that you kind of figure out how do you plug into the right communities. The third thing is, okay, now that we're there, how do we build opportunities to test different models? And this is where we need the risk capital that has the appetite to try and test these different innovations. So catalytic capital is very important. And for that to happen, we need those sitting with grants or concessional capital. This is foundations, aid agencies, family offices, and governments to shift away from traditional philanthropy and do a bit of catalytic investing. And one of the biggest things about catalytic investing is you're basically going in to say, how can I use my money to de-risk social investments in a manner that crowds in 3, 4, 5 times my money from private capital. So for every round I put in, how can I demonstrate a proof of concept of this solution in a manner that it's attractive to the private investor who can come in with 4 or 5 times my money? So in essence, actually, what you're partly doing is taking a bit your money, running a couple of experiments on small experiments on some of these things. Exactly what Anglo-American have done is you've got to test different things, and the one that works, then you put in a bit more money with confidence. So, and we've seen a couple of models on the continent around that there's quite a lot of people now, foundations coming to catalytic capital and investing space. We're also seeing collaboratives. So we are supporting and building some of those ones where we bring together people who've got an interest around a particular problem. So we've had a couple of people who have an interest in agriculture, for example, and they want to solve it differently and crowd in more private capital because they realize the current money they have is not enough. So they come together, pull their money, and as a collective, they can share the risk, share the pipeline, share the network. And that way, then they can test different instruments or different approaches. And the one that works, then they put in more money with confidence because they've got evidence and track record. So collaboratives are growing quite a lot. We are supporting a lot of those ones, and a couple of people have come to us to help them build in different sectors: agriculture, healthcare, so on and so forth. We work very closely with a group called the C3 Catalytic Capital Consortium. That's probably the leading organization in the world around catalytic investing. We're actually running a catalytic investing training program from May to help people get more knowledge in that space. So those are the kind of things that I think we need to do a lot more. But the easiest way for us to really get good at this, Jeremy, in summary, is one, be curious about what the new wave and way of doing things will be. And the way we are going around trying to do more with less, leveraging catalytic capital is going to be that. Two, plug into relevant networks. And if you're really lost between Trialogue, ourselves, and a few others, you'll find the right home. Thirdly, gain the knowledge if you can. And then where possible, learn by doing. And that's why I like the collaboratives, because the collaborative is not just about people coming together as a group. They also pull some capital. And with the capital, they're able to try out different things. And that's the way we're going to do this. Because the reality going forward, Jeremy, we're going to have to drive African solutions to African problems. No one's going to come and solve these problems for us. I'm not sure whether you've seen the US government just 3-4 days ago released the strategy for Africa. And they had 3 pillars in that strategy. One is commercial diplomacy. So it's trade, not aid. And they're unapologetic about it. So private investments over aid. Number 2 is foreign assistance, which will follow US interests. Okay. Number 3 is conflict resolution. And one of the things they said there is if there's a conflict and does not affect US interests, they're not going to get involved, amongst other things. So we need to prepare ourselves for this aidless world as Africa. We need to get ready to mobilize on domestic resources as well. So I'm really proud of the stuff that Anglo American is doing. In we're seeing more local capital coming in. We're seeing more pension funds getting an interest in investing in this space. But we have to innovate for ourselves. And there's no better place to innovate than in Africa, because we have such a diverse set of challenges that it allows you to test different things in very different spaces. What Bright is doing in the middle of nowhere can be scaled and replicated to many other places. And I strongly believe that whatever works in Africa is globally scalable, not the other way around. So we're very fortunate to be where we are. In fact, what I tell people, what were embarrassing problems 15, 20 years ago are exciting impact opportunities today.
Thanks, Frank. That's really, really great kind of summary of where we're at and what could move us forward. One of the things I was thinking about as you were talking was, Samira, we had a chat about the Anglo American Foundation as a sort of very independent organization that obviously gives you quite a lot of leeway in terms of, experimentation, patient capital. Just curious, I mean, Frank talking about the collaboration and the need for collaboration and also mindset shift, especially when it comes to kind of more commercial capital. So my question is, do you see a role for the Anglo American Foundation to play in kind of helping with that mindset shift, for example, in the Anglo American organization or in other organizations, sort of other commercial organizations? Obviously, being independent, you have sort of guardrails in place to make sure that you maintain that independence. But are there advantages to working together, to being more aligned, or do you have any thoughts around sort of whether there could be spaces where you do collaborate?
Yeah, thanks, Jeremy. No, and it's a good question. We are an independent philanthropy organization, and therefore we have the agency to make decisions. But we know that we sit with a giant behind us through Anglo American, right? And without leveraging each other's capabilities and needs, we're missing a huge opportunity. So we do aim to work with the business. We must work with the business in a way that can create impact. And we are working with the business across various opportunities. Some of them do include capital and innovative finance work. So Anglo American has the Impact Finance Network. We are working with the Impact Finance Network. In fact, the Impact Finance Network are on a journey, and one of their businesses makes a great input into Aseli. And so, we're trying to find links on the value chain that where we can. We also work with the business around doing civic engagement work. There's work around circularity. The reality is that we need to work together to create maximum impact, whether it's with the business, whether it's with other corporates, whether it's with other DFIs, or whether it's with the likes of ABPA, as well as Frank said, we are part of the ABP a network. So we must learn from one another. We must design around our capabilities. So absolutely.
Can you give a specific example of how you do engage with Anglo American?
Sure. So in our work around circularity, we worked as we funded the program around waste work, where we said, how can we develop and support the verification of waste throughout its value chain? So from the waste picker picking the waste, tracking, can we track that to a buyback center, to a recycling plant? And we developed the technology around it through grant funding. We worked in partnership with organizations like our labs, like TechnoServe, as well as, and then fed those learnings into broader platforms such as the Alliance for Plastic Waste. And through building out that technology, we proved the pilot, and it was quite an interesting one. We could verify the handshakes. This technology could then be scaled. We're now looking at how do we work with Anglo American to scale the solution, which is piloted in Gauteng, to combine taking into the Northern Cape. We have the lessons similar to Aseli. We've developed the research we're willing to share. On Aseli, we've also developed a handbook or research rather report, which we have put open on our website for public to share. So I think that's also where we as a foundation recognize we have the strength, given our capital to learn and be patient, we can put out our learnings to the public. And that also is where we take our work forward, and we can leverage each other's work.
Thanks for that. Yeah, it's a big ask, and I guess there are these different silos where people have day jobs and they have pressures that's to meet objectives. So it's kind of that kind of desire for collaboration, and then the actual reality of how hard it is to sometimes do that. I just want to remind our audience that there's a Q&A function available to pose any questions to our panelists. We've also we're launching another poll just to understand a little bit more around, what are some of the challenges that your organization might face in pursuing impact investing strategies. It'd be great to get a sense of that from the audience as well. Just want to have one final question to you, Samira, and then I want to jump back to Bright. For organizations like Anglo American Foundation, what are sort of the key lessons you would want them to know based on your experience with Aseli? How did you, if you was in a position where you were 2 or 3 years ago and you were kind of starting out, what advice would you give yourself, or what advice would you give others in a similar position wanting to kind of test this kind of more innovative way of doing social impact?
I think the thing is that there's a lot of players in the market looking to do the same, right? And a lot of people are wanting to start, not knowing where to start. And our biggest success, as I said before, was that we partnered with people who know it. So we didn't have the full skill set to come and put the solution ourselves. We partnered with organizations. We reached out to our networks. So you don't have to know it all, and you shouldn't have to. You're stronger together. We had a North Star. And so every time we brought in new information to the group to say, what do we do with this information? How does it influence us? It wasn't our individual organizations' ambitions that were driving it. It was this North Star of how do we design around the operational realities of the businesses that we're solving for. So it was, what are those green SMEs? What do they need? And that North Star guided us. but we did a lot of work to test, to speak to people that we have in our networks. We went to Frank, we shared our information with Frank, and we drew on all of our networks. I think that is probably the best thing we could have done, was just lean on those that we have around us, as every organization, both so Savant, Crutham, as well as the Anglo-American Foundation. And then it was hard. You have to have those difficult conversations. This work is not easy, also because of the structural, the ecosystem, right? The legal structures were not easy to navigate to come up with this. We had a lot of technical conversations around tax, around legal structures. This was the first loan for the foundation. How do we want to position this loan for us? But in having those hard conversations and asking yourselves those questions and leaning on those who have done it before, I think we were stronger for it. So yeah, it really is about learning and collaboration, and just trying to leverage the capabilities of those you have around you.
Yeah, and I guess, I mean, the expertise is out there, and it's like you say, it's about being open to where you have gaps in your own experience and knowledge,
Yeah.
and being.
And talking about collaboration with the business, we tapped into the business's expertise, their legal, their tax advice. We have that ability, we have the skill sets in the business, and they were very willing to support us on this journey. And so you have to also leverage, if you do have a corporate sitting behind you, they have done this, they are commercial, where we have a development lens. So it's about marrying that mindset and growing together as well.
Yeah, and that's such a key point. I mean, there's so much expertise in businesses that can be drawn on as well. So that's also just a great example of how to link this kind of initiative back into the business, even if it's not sort of operating in a similar market or with similar customers or client base. There's still ways to sort of draw on, and I guess in those conversations, you're also helping have that, like, talking about a new type of innovative structure, and that creates a bit of interest or a bit of mindset change as well.
Yeah, I mean, yeah, you can imagine going to commercial lawyers and saying, look, we want to be patient, we want to be flexible. We have, the payback terms are really long term. They're like, well, this doesn't make sense, right? But once you walk that journey and you explain why and what you're trying to achieve, it wasn't a difficult shift. And in fact, the support we got was incredible. And people linked us with more and more people we could speak to. So you do end up creating these champions in the corporate for what you're trying to achieve, because you have a goal, and that goal is something that anybody can buy in, because it really is about supporting domestic businesses to scale and to thrive.
Thanks. It's really helpful insights, and maybe want to just kind of follow a similar line of questioning with Bright. I know Skatech obviously is a large organization, lots of different things going on, lots of different I guess sources of funding. Do you see any sort of potential for more collaboration down the line on similar projects, or, as you said, sort of thinking about this community and bringing in, whether it's renewable energy or sort of drawing on the capabilities of that organization? If you were in Skatech's shoes, would you sort of take this experiment that they've done to an extent and try and extend it or expand it, or how would you sort of think if you were in that position?
I think Frank actually answered that question already. We can take the whole model and replicate it all over Africa at this stage. So yeah, with that, I think there's definitely still I would actually take the same model and try and obviously it doesn't work the same in every single area. We all understand that. But I think the essence of it, if I was Skatech, I would have done that in different areas as well. Different communities as well. Obviously, I should also say that farming has got its own limits, if I could say that, even if it's another type of business, that's been set up, but for the community itself. So the model is very simple. It's like building a mall. That's where we look at it. It's like building a shopping center where you've got the anchor tenant. And then the anchor tenant would have been, let's say, Shoprite as an example in some rural areas. And then around that, there's little shops that really come around. And that's what we have done in Onsiepkans, is that really the Onsiepkans project itself is really just the main catalyst for other small businesses to also start off. So that's what we actually partnered with SCATEC to do. That's what we've been doing now. There's the one big entity that I'm speaking about now, but there's also other small ones that are started. There's a water entrepreneur that we've set up. There's actually a waste, is it now recycling as well, that's been set up. And there's also other entities as well that's been set up. But you can see that where Onsiepkans project is the main driver to bring some economic, at least bring some money into the area. You can see that how the other projects also start off. So within that sense, I would literally replicate that in other areas as well. And when I think of SkyTech's involvement more than just the project itself, I would say it would really depend on what business you were allowed to set up. In fact, now we are in also still preliminary talks with them, also with another project as well within the Free State that we kind of looking at. But the same sort of modeling, that's what we look at of building. Obviously, I'm speaking from a blue sky perspective and trying to emulate that within SCATEC itself, how that can work within their systems. But definitely, Jeremy, I would take this as a case study and try to see how we can replicate this in other areas as well. So that would be my answer to that question.
Yeah, no, fair enough. It sounds like a very successful project. I see some poll results coming in. Interesting to see that the top result of what is the biggest challenge your organization faces in pursuing impact investing is a lack of internal expertise or knowledge. And I think based on Frank's comments as well, I think it's not just sort of expertise, but also that practice of learning by doing and having done these things before. It's resonated with the audience as well. We've got a question from someone in the audience. So from Sarah Whitaker, I imagine some of this legal work is being done for first time in South Africa. What is the best way to make sure others don't need to learn the same lessons and are able to leverage this innovation? Maybe a question for you, Samira. Any thoughts on how we sort of make sure that we're not having to kind of keep learning the same lessons and that others can have access to what you've learned?
Thanks, Sarah. So we have put out a research report, and I'm happy to share the link in the chat. The idea behind the research report is actually we want to share the knowledge, and through sharing this, you can join us at SLE. You can take it and make it your own and copy it, right? So have a look at our research report. You're welcome to chat to us. Part of our intent as the foundation is around that knowledge and that learning and contributing towards the sector knowledge and learning and growth. So happy to share.
Great, thank you. We've got about just over 15 minutes left. I want to give the floor to Nick. Maybe just sort of spend 5 minutes or so just sort of helping reflect on some of what's come up, some of the challenges, your perspectives on the way forward, just having listened into the conversation with the panelists today. Over to you, Nick.
Thanks very much. And thanks very much to the panelists for, I think, very insightful and wonderful discussion here. I mean, I've just been reflecting on what's been said, and I've been trying to take out some points. And I think it's very clear that this is a very critical and growing space, but it's grey and it's varied and it's uncertain. And my sense is that we're just dipping into this topic from a corporate perspective at the moment. And there's such a journey ahead of us in terms of the way to go and the way this can all unfold over time. What did come out for me is the remarkable innovation and innovative mindset that both those case studies sort of yielded. The solutions didn't pre-exist. Both Anglo and Blue Sky went in and they identified the blockages, and they developed solutions to solve this. And we really believe that given the extent of funding and within the corporate philanthropy space, that's where it can be most impactful through that sort of innovative approach and uncovering solutions that can ultimately be scaled. So Anglo really shifting this grant funding into sustainable regenerative fund, Blue Sky developing a model that works on the ground where individual contributors wouldn't be able to scale and work together. I like Frank's comment, be curious, look for those solutions. And this wonderful opportunity of scaling, both in Blue Sky and Anglo, saying, well, the lessons are there. They've gone through a lot of pain coming up with that legal structure. One can actually get there a lot faster by learning from others and standing on the shoulders of work that's been done. I think corporate's obviously central to the picture. Frank, in his opening, pointing out the bigger perspective, how these massive funding shortfalls are pervade through Africa, and how corporates can get into the risk space. And it's a non-traditional space where you need to sort of, understand that you can shift out of the commercial space, the pure commercial space, and it's a change of mindsets required. But profits aren't necessarily off the table in doing that. That one can find solutions where it can work developmentally and commercially as well. And the case study is really showing that the corporates were in those cases the primary drivers, getting involved and actually driving the solution. I liked the Anglo example, not just in the fund that was set up, but the waste example, really showing how grant funding can lead into a sort of commercial solution that can be taken through the business and national interests. There's developmental mindset is a uniquely developmental mindset. People see things through a different lens, and a commercial mindset is a commercial mindset. You're thinking profits and ROIs, and those two pieces within the corporate space don't always fit together. So the blended approach, where you've got different people in the room thinking both developmentally and commercially, I think is so strong. And I do think it takes a corporate with a particular sort of envisaged purpose, sort of ambition around that, and being purpose-led. Anglo's North Star example, I think, was great to hear. I think it starts with an intent, and it goes through from there. It is about the money at the end of the day, and it's clear that there are multiple sources of funding. These funding pockets don't always come together. Frank, obviously with ABPA, looks at how these different blended finance approaches can do, because that's their business. They sit in that intersect. But often these pockets exist in isolation, and I think the potential to grow the impact space is really to look at how these blended structures can come together, where you've got long-term, and the word patient capital keeps coming up, where you've got those things. That's not a commercial, something a commercial funding typically looks at. And I think that there's such potential to bring that. And to Frank's point, just not enough risk capital. So how do we actually look at these blended funding things to actually deal with the risk issue and the commercial issue? The governance structures, I think, was very insightful. These are complex and unique challenges, and often homegrown. And time was taken. It's not a plug and play. Samira said when they went to the lawyers, it wasn't a familiar conversation. They couldn't pluck off a structure off their computer and say, well, there you go. They had to sit and think about how that worked within the context. It was I think wonderful also to hear that Anglo had that flexibility to get into, setting up a capital fund. I'm not sure, and my sense is, and we'd need to find out over time, how many corporate philanthropy offices or commercial CSI offices, CSI offices, have that flexibility, and I'm not sure that many do. And it might take a little bit of convincing to get the governance structures to shift their thinking around how they can actually spend that money differently. So I think that's going to be a challenge going forward to see just exactly how companies can shift within those CSI foundation spaces. And I think the knowledge piece was the last sort of takeout for me. How there is such maybe a shortage of knowledge that came up in the polls, and how we just got to keep these conversations going through thought leadership platforms such as this, just highlighting the issues. But also, I think within companies to be prepared to go on a learning journey. The solutions aren't all there; they're not all pocketed. So it's going to take some time, walking through organizations, understanding where those opportunities are. And for, in NPOs likewise, where are the opportunities within your organization and within the ecosystem within which you're operating. So it's not an easy traditional, here's our project, provide some grant funding and let's get on with it and we'll let you know how the money's been spent. This is a different space. And it's going to take some learning and some unique thinking. So sorry, Jerry, those are just the takeouts that I picked up from the conversation. But thanks again, I thought it was very rich.
Thanks, Nick. We'll close in a moment. I just got one question from the poll from the platform from Kathleen, and I'm wondering whether maybe Nick, you want to just briefly speak to it, or if you can see it. It's some corporates wanting to sort of design and develop their own innovations rather than partnering with the development or nonprofit sector. And I think this is a good question given the number of sort of nonprofit organizations we have on the call. Kathleen's saying sometimes solutions that corporates come up with even clash with the advocacy work of the sector. How can we change this relationship? And maybe there's a bit of a question around power dynamics there as well, and address some of these tensions. You got any thoughts on that?
Yeah, I mean, I think there's models where corporates try and take it in-house. There's models where they simply outsource that, and there's this sort of blended model where a corporate interest is looked at in a true partnership, not just a funding partnership with an implementing agency where they say, this is what we can bring to the table. Corporates do have knowledge, they do have in-house expertise. So it would be wonderful if they're able to tap into that as part of the development of solution. There's capacity, knowledge, and in addition to funding. So how do they bring that to the table? But also corporates aren't necessarily developmental experts in particular fields. So how do they work in true partnerships with organizations? I think in both those case studies today, people went and found the right knowledge in the room without reinventing it takes a lot longer to learn yourself, and you're going to make mistakes, and the development world's complex. So pulling in the expertise, testing a solution with the right partners. Anglo found the right partners to work with. They backed them. They recognized that there was learning on the way, and I think that sort of is a very healthy way of engaging and bringing implementing partners to the table without just simply abdicating the responsibility for the work to those development partners, but also not shutting them out. I think there's a balance that often works.
Yeah, I guess that the importance of being open and acknowledging where you have knowledge gaps, and that might also include for corporations, having not worked in the development sector as much, or finding partners who really understand the problems on the ground, and not sort of trying to reinvent the wheel that way either. So yeah, thanks, Nick. Thanks, everybody. I want to give a minute or two to each of our panelists, Samira, Bright, Frank, just to give your final thoughts. I just want to have your kind of thoughts on this question, which is, where are we going to go over the next 5 years? If everything went kind of the way you hope it goes, what does sort of lead practice in this innovative financing, but sort of partnering with bigger organizations, bringing in private capital, sort of making these partnerships work in practice. What does lead practice look like in 5 years' time? And do you see this space as something that becomes more and more mature over time? I'll maybe start with Samira, and then we'll go to Bright and Frank.
So I definitely feel the space will grow, and I think that philanthropy is looking at how to deploy its capital differently. But maybe if I share a story from one of our investors, so our one of the first 2 organizations we invested in, Ditto Labs, which is a food technology company. Through their investment, Ditto was able to improve its packaging by purchasing a packaging machine. And with the patience of this loan, they had taken away the pressure of repayment. But what Ditto did was that they then started offering the machine to other local SMEs in their communities to package their work and their products. And therefore, they reduced the repackaging cost and the manufacturing cost, not only for Ditto Labs, but also for other SMEs and supporting jobs. And I think what is really interesting is when we said, how do we design around these operational realities? The truth is that these SMEs are already designing around the operational SMEs, and they're really supporting one another. So for me, that really is where the power of this work is, and where the future lies.
Nice, thank you. Bright, from your perspective, what does the next 5 years look like, and what is maybe your hope for this sector?
Yeah. I think Nick started off by saying that we're just scratching the surface of it. So a lot of discussions and I mean, these type of settings needs to be held. That's one. And the one is a partnership really stands out for me, whether it's from a developer, funder, or even the corporate world as well. That's one of it. I'm hoping that the partnerships will carry on, because you need long-term, commitment towards making something sustainable. I mean, a business, or just assisting the communities as well. And a lot of patience and competent resources. That's really something that stands out for me. And I might just reiterate the patience side, because it's quite funny in the space that we work in. It's that you work with people that they don't even know how to set up their business, but they've got at least the assets that are there. You can assist them with that, and that takes time. So it's a lot of patience that comes into the game. I'm hoping that we'll get to that with the case studies that we have seen on what works. And truly being said, it's really a work of trying to figure out what's the next step every time when you get to that junction. And that's really what we're dealing with. So I'm hoping that the case studies that are there can assist us to even develop the next 5 years to be better and better off. Yeah. Thanks, Jeremy.
Thanks. Patience is, it's one of those words that for traditional capital often is a challenge. Frank, we've been talking about catalytic capital, the shift to more innovative financing. It feels like for some time, and it feels like something that gets talked about a lot. Is the next 5 years the period in which this becomes reality and mainstream?
If we are committed to this, it will. And so the next 5 years for me, what success looks like is first of all, let's not waste the crisis we're in at the moment. History will judge us very harshly if we waste this crisis. And the best and most significant milestones in the human race have come through moments of crisis. And this is one that we're facing at the moment. So one, I'm hoping that it stimulates a sense of urgency from our side and moves us away from compliance to commitment. Some of the programs we do, because either the government expects us to do them, are very compliance-driven and not commitment-driven. I think that's one of the first things I'm hoping we in 5 years will have shown that we'll have made some significant leapfrogs of an advancing innovation based on the current crisis. That's number one. Number two, we'll see a lot more homegrown solutions, because we are taking ownership for solving our own problems in our own way. Number three, we'll do that through more collaboration. So more collaboratives, And to the question you asked, Nick, the last question around, I think it came from the chat around how do you align like NGOs and for profits. I think collaboratives are best built around the problem, not so much the solution, because the solution will look very different once you take a neutral view of we're coming around because we want to solve this problem. And this is the different things we bring as different players. The minute we lead with solutions and interests come in before we've even aligned and gelled the group. So I'm a big believer in falling in love with the problem first, and then you build the solution based on the strengths of the convening parties. So I'm hoping we can see a lot more collaboratives. Number 4 for me would be a true testament for us is where a lot of our solutions are scaling beyond where they were innovated. So how are we enabling some of these solutions to go into other cities, other towns, other countries, and even other regions? Because we are very fortunate to be able to have this diverse set of challenges to solve what no one else does. In Africa, when you're solving a problem, it's not convenience. You're solving a life problem. Someone's life is actually changing. And we're very fortunate to be in a space where we can influence lives for those of us who sit in positions like you and I. So this is the kind of thing I'm hoping we can do. And corporates also, the final thing for corporates, because majority of people here from the corporate space, is in 5 years, I'm hoping we don't have this conversation about profit and purpose. We should be thinking about deliberately mainstreaming this conversation in the boardrooms, that we can make money as we solve for human need. Those things are not mutually exclusive. And there's increasing evidence to show that is very possible. So as corporates, as we're spending money, and we're going around into spaces and stakeholders, we need to ask ourselves, what impact is our presence having? What impact are our investments having? Our practice of delivering value and business, how is that influencing more than just profits?
Thank you so much, Frank and Samira and Bright, Nick, for your contributions. That brings us to the end of today's webinar. It's 11:01. We hope you got some useful insights. Thanks for also responding to the poll about what you hope to see next. Nice to see there's lots of interest in next steps, and that this webinar didn't give you everything you needed, because I think there's a lot more depth to these discussions to be had. We're looking forward to see you at our next monthly webinar, which you can find on the website. Thanks to everyone again for joining, and have a great day.